For years, Tesla was the most admired company in the world. It disrupted the automotive industry. Its stock price increased 100-fold. It made Elon Musk the richest man on the planet, and even turned millions of investors into true believers. But now, something has broken. Sales are no longer increasing, profits are falling, and subsidies have vanished. And yet, despite everything, Tesla continues to trade as if it were about to conquer the world, as if robo-taxis were already in every city, as if humanoid robots were going to generate revenue tomorrow, as if the future were already a reality. But what if it's not? What if the market is valuing Tesla not for what it is, but for what does not yet exist? What if, while Elon Musk is embroiled in political wars, what's really at stake is the soul of his company? Today on Visualeconomik, we're going to dive into the Tesla myth, the story of how a company that doesn't advertise ended up becoming what is perhaps the greatest marketing campaign in history. And we're also going to try to answer the question no one wants to ask. Is Tesla the company of the future, or the most expensive illusion of the present? Are you ready for this wild ride? Let's get started. But first, let me ask you this. Have you noticed how everyone's suddenly talking about making money with AI? It's simpler than you think. No years of experience, no expensive degree. With AI, you could start earning in just weeks, whether that's landing a high-paying job or launching something of your own. AI skills aren't optional anymore. People who have them are 130% more likely to land opportunities. Now here's the exciting part. This weekend, you can join the 2-day AI Mastermind Workshop by Outskill, the world's first AI-focused education platform. In just 16 hours of live, expert-led training, learners have already built over 100 AI products with zero coding, many pulling in 3 to 4K in revenue. Normally, this program costs $895, but we've partnered with Outskill to give away 1,000 free seats exclusively to our viewers, only for the next 72 hours. That's nearly $900,000 worth of training, totally free. And by the way, it's rated 4.9 out of 5 on Trustpilot. Why does this workshop stand out? Short and effective. Just 16 hours, great for busy schedules. Lifetime access to Outskill's exclusive AI community, 5,000 plus members. A seamless AI learning dashboard, already trusted by 10 million plus learners worldwide. Over the next 2 days, you'll dive into prompt engineering, 10 plus powerful AI tools, automating your workflows, and building AI products without code. Also, if you sign up now, you get exclusive bonuses worth $5,100, a prompt bible with 3,000 plus high-impact prompts on day 1, a roadmap to monetize AI on day 2, a personalized AI toolkit builder, only if you attend both days. So clear your weekend, Saturday and Sunday, 10 a.m. to 7 p.m. Seats are limited and filling up fast. Grab yours through the link in the description. Oh, P.S. Join the WhatsApp group to stay updated before the big launch. And now, back to our topic.
A dream worth $1 trillion.
It turns out that Tesla wasn't born with Elon Musk. Almost no one knows that. But it's true. The company was founded in 2003 by these two engineers you see on the screen. Two brilliant guys completely obsessed with electric cars, who dreamed of building something unique and completely disruptive. A car company that would manufacture cars that didn't use gasoline, that didn't pollute, that didn't depend on the whims of sheikhs. And what about Elon? Well, at that time, he had just sold PayPal. He had money. He was hungry, and he had a vision. So he put up the initial capital, became chairman of the board, and it didn't take him long to take control. Years later, the original founders were gone. But Elon had taken the whole pie. And since then, we can say that Tesla is basically Elon. So to understand Tesla, we have to first understand exactly who Elon Musk is and what he's all about. Not how he's portrayed on social media, not how he's loved or hated on Twitter, but as he really is, an entrepreneur who's been on the verge of bankruptcy more times than he'd like to admit. A leader who pushed Tesla to the limit, while he himself slept on the floor of his factory. Literally, in the toughest years, when no one wanted to finance his crazy vision of electric cars, Musk lived on the assembly line. He slept there. He showered there. He monitored every system and stage of production as if it were a work of art. And so, time and time again, when it seemed like Tesla wasn't going to make it, he took one more step, and he succeeded. These days, many people mock him, and the truth, he may not be the most likable guy, but no one can take that away from him. Without him, Tesla simply would not exist. Now then, what's the cost? Let me explain. Working at Tesla is not like working at Google, not even at Amazon. It's a completely different planet. The hours are endless, the demands are brutal, and the culture, it's practically that of a war company. Which has also been part of their secret. Because at Tesla, when an engineer has a good idea, they don't try to implement that improvement the following year, but that very week. At least that's the philosophy, and it explains why, in some fields, Tesla is often ahead of the game on a technical level, despite being a newcomer. Batteries, software, efficiency, in certain fields, Tesla has been a story of constant innovation. In others, we know that this is not so much the case. I admit that I'm not the biggest fan of Tesla cars, but we cannot deny the reality. And besides, as you know, costs are king. Be that as it may, the point is that all this has also created chaos. Lawsuits, accidents, layoffs, strikes, protests. Tesla has never been a normal company, and neither has its CEO. Because Musk isn't just a visionary, he's quite a character. And not just any character, he's basically the Tony Stark of Twitter. Literally. The Iron Man character in the movies, that eccentric billionaire who launches rockets, creates robots, and lives amid scandal, is inspired by Elon Musk in modern times. In fact, he appears briefly in Iron Man 2 in a scene in Monaco with Robert Downey Jr. Fiction, maybe, but if you think about it, reality is no less amazing. In recent years, Musk has not only led Tesla, SpaceX, Neuralink, and The Boring Company, he has also bought Twitter, renamed it X, and turned his account into a channel of global influence and power. A single tweet from him can move markets. It could destroy a company or lift it up. And in that power game, he crossed the line. First, he clashed with the Biden administration, which stopped inviting him to key events. Then he cozied up to Donald Trump, sticking to him like glue after his return to the presidency, and led a new agency, the DOGE, the Department of Government Efficiency, created to reduce public spending. For a few months, it looked like Musk was going to turn Washington upside down, but what can I say, the alliance didn't last. Ego clashes, internal leaks, fundamental disagreements, excessive ambition, and finally, an explosive breakup. Musk resigned from Doge, and social media went wild. Trump called him a traitor. Musk responded by calling him little short of a pedophile. Let's just say that the two of them got into an open war that, to this day, has not ceased. And clearly, Tesla paid the price. The government withdrew several key subsidies that favored the purchase of its electric cars, and the political climate turned against him. Today, many institutional investors no longer see Musk as a guarantee of success. They see him as a huge risk, as an uncontrolled genius, a guy capable of launching a rocket or destroying his own company. But despite everything, the market continues to value Tesla as if nothing had happened. It's true that since its December highs, the stock has fallen more than 30%, but it's still up almost 40% over the last year, as if everything were fine, as if the future were already here. But the question is it? Because although Tesla continues to manufacture benchmark electric cars, its stock price reflects something else, a hypothetical future where its robo-taxis dominate cities, and its humanoid robots dominate homes. Because that is exactly what explains why its stock market value remains above $1 trillion, which, to put it plainly, means that Tesla alone is worth 20% more on the stock market than all of these car companies combined. Toyota, Ferrari, Mercedes, BMW, the Volkswagen Group, General Motors, Honda, Ford, Hyundai, Kia, Stellantis, Suzuki, Rivian, Subaru, Renault, Nissan, Volvo, Mazda, Mitsubishi, and Aston Martin. In other words, practically all Western manufacturers. So logically, Tesla's valuation is not about cars, but about technology and the future. And the problem is that this future does not yet exist. It's true that in July 2025, Tesla finally launched its first limited network of robo-taxis in Austin, Texas. An initial fleet that runs on specific routes with surveillance as a kind of pilot program. It's also true that Optimus, its humanoid robot, has been presented in several demos and has surprised with its technical advances. But it still has no commercial application. It does not yet generate revenue. Many details are still unknown because it's still an experiment, and yet the market is acting as if both worlds were already a reality, as if the company were already monetizing these two revolutions, as if Elon Musk had already won. But what if that's not the case? What if all this goes off course? Why am I saying this? Because while the world is watching Tesla, China is already preparing its counter-offensive. Brands such as BYD, NIO, and Xiaomi are developing increasingly competitive electric cars with operational efficiency that threatens Tesla's margins. And of course, they're also making great strides in everything related to autonomous cars. Not to mention that other tech giants are also entering the autonomous driving market. Apple, Google, Amazon, they are all investing. They all want a piece of the pie. They're all willing to fight hard. And if one of them, let's say Tesla, stumbles, the others won't hesitate for a second to take its place. And that brings us straight to
The company that is worth what it is yet to become.
For years, Tesla was the big growth story in the market, from selling just 50,000 cars in 2015 to selling almost 2 million a decade later. From being a technological promise to becoming the largest manufacturer of electric vehicles on the planet, which, if you think about it, is a huge commercial and technological success. And of course, that also made it almost a financial miracle. Its share price skyrocketed by more than 1,500% between 2018 and 2021, surpassing $1 trillion in market value. Tesla was not just a car company, it was a symbol, an icon, a banner of disruption. But 2024 marked a turning point. For the first time in more than a decade, the company stopped growing. Revenue stagnated at around $97.6 billion. If we take a look, for example, at its quarterly turnover, we can see that there has been no cause for celebration for some time now. In fact, forecasts for 2025 even point to a slight drop in its revenue. Deliveries are down, demand is cooling. Key markets such as Germany and the US are beginning to show signs of saturation, and in the meantime, the competition is continuing to push harder and harder. Even Elon Musk himself seems more focused now on getting other projects off the ground like xAI, his big bet on artificial intelligence, which admittedly will probably be crucial to Tesla's autonomous driving, but it's not strictly Tesla. And yet, the market continues to value this company as if it were going to conquer the world. As if we weren't dealing with a company that generates just $7 billion in operating profit with a margin of 7%, but rather a kind of technological empire capable of doubling margins, multiplying revenues, and dominating entire industries that don't even exist yet. And that is precisely what Tesla is today, a gamble on faith. A company that, in July 2025, is trading at more than 30 times its estimated profits 4 years from now, with a market capitalization of nearly $1 trillion and a share price that discounts an ambitious, promising, and potentially very lucrative future, but also an uncertain future that is highly dependent on everything going perfectly. And that, in the world of investment, is called risk. Opportunity and risk. If its robo-taxis don't scale, if its humanoid robots don't end up working as expected, if Chinese competition moves faster, the whole house of cards comes tumbling down. Tesla projects revenues of $222 billion in 2029. That would mean doubling current sales in just 4 years, in a context where it has already lost its early mover advantage, where its current products are no longer growing, and where technological barriers to entry are shrinking. And that's not all. Its operating margin would also have to increase from the current 7% to 16%. This would quintuple operating profit to $35 billion. That would allow for an estimated earnings per share of $10.50 and justify more or less the current share price. But that's not the problem. Can he do it? Of course, if Elon Musk has proven anything, it's that he's capable of getting incredible projects off the ground. There's little doubt about that. And clearly the potential for robotaxis and humanoids exist. However, the problem is that all of this is taken as a given. In other words, the market has internalized that Tesla will inevitably achieve a global network of robotaxis, scale up its Optimus robot, increase margins, dominate autonomous driving, and that all of this will happen without any major setbacks, no mistakes, no strong rivals, no political risks, as if Tesla were completely invulnerable. And the reality, well, let's just say it's probably much harsher. Its rivals are out there, and let me stress, we're not just talking about traditional brands like Toyota or Ford. The real danger may come from China. Brands such as BYD, NIO, and Xiaomi are not only manufacturing cheaper, they're manufacturing better. Their processes are more efficient. Their vertical integration is astonishing. Their models are increasingly competitive. In terms of sales volume, BYD has already surpassed Tesla in pure electric vehicles in several quarters. And it's done so without the need for a cult of personality, without memes, without science fiction promises. And not surprisingly, the Chinese are also racing ahead in autonomous driving and robotics. The West is taking it so seriously that the EU and the United States have begun to fortify themselves. Tariffs, investigations into unfair competition, internal subsidies, all to stem a tide that already seems inevitable. Because while Tesla presents a prototype, China is already mass producing it. And that factor, speed, is absolutely vital. Because if the market becomes a game of margins, efficiency, and rapid scaling, Tesla may no longer have such an advantage. Can it remain the leader? Sure. But it needs more than a good story. It needs results. And that's precisely what it's beginning to be short of. Tesla's ROIC has fallen. It's no longer at levels of excellence. Net profits are growing much less than expected. And although it has cash on hand, about $24 billion, the company is no longer the unstoppable monster that surprised every quarter. At the same time, Elon Musk, who for years was the company's greatest asset, is beginning to cause concern, not only among politicians, but also among institutional funds. Because Tesla is no longer driven solely by results, it's driven by narrative, by what Elon says, by what Elon promises, by what Elon tweets, and that turns an engineering company into an act of faith. Tesla probably still has the best technology on the market. Its autonomous driving software is years ahead of its Western competitors. Its factories are marvels of automation. Its margins are still well above the industry average, but it's no longer untouchable. These days, Tesla is competing against itself, against its promises, against a brilliant past and a future that demands ever greater perfection. Because if it doesn't deliver, the market will not be forgiving. And that is the major question. Is Tesla cheap, expensive, or simply overvalued by wishful thinking? Because when a company is worth hundreds of billions for products that don't yet exist, for margins that haven't yet been achieved, and for markets that aren't yet open, any misstep can be very costly. The disruption was real, the revolution was too, but what it is valued at today is not what Tesla is, it's what it could become. And that, on the stock market, is always a double-edged sword. But the thing is that there is something fascinating about this company. How it has managed to conquer not only the market, but also the collective imagination. How it's gone from being a ridiculed startup to a kind of technological prophecy. A promise of a clean, autonomous, and electrified future. It became a symbol of progress. But prophecies don't always come true. And that is the big question hanging over Tesla today. Is the market valuing what it is, or what we imagine it will become? Because one thing is clear, Tesla today is not a high-growth company. It's not a disruption that explodes every quarter. It appears to be a much more mature company, with stagnant sales, regulatory pressure, and real competition. And yet, its multiple remains that of a miracle company. 30 times projected future earnings for 2029. As if everything were going to turn out fine, as if robo-taxis really would work on a global scale, as if humanoid robots would become household appliances, as if margins would double and Chinese competition didn't exist, as if Elon Musk were infallible, but that not everyone believes anymore. Today, more and more voices are questioning that narrative. They see Tesla not as a safe bet, but as a technological gamble. An excellent company, yes, but one that is betting its future on a card that has not even been dealt yet. And that card does not depend solely on Tesla. It depends on politics, on the economic environment, on subsidies, on social acceptance, on the pace of innovation of others. Above all, it depends on whether the world wants that future, and whether it arrives in time. What do you think? Are we facing a historic opportunity, or a company overvalued by dreams that have yet to be fulfilled? Do you think Tesla will dominate the next decade, or will it end up being a victim of its own myth-making? Leave us your opinions down in the comments. As always, we provide the data, you decide on the investment. See you soon in the next Visualeconomik video.